This is your LMAX Exchange technical update for Monday, July 10th, 2017. Euro dollar. So the euro continues to sit just off its fresh 2017 high, and there still is risk for a little bit more of a push higher before the market looks to roll over. The reason why we believe the market is at risk of rolling over is because we're coming up in 2017 into some meaningful resistance in the form of that range highs that go back to 2015 to present. Back in 2015, the market traded up to 117 but was very well capped up there before a sharp pullback. Then we saw another market rally up towards 116 in 2016 before the market pulled back again to fresh 14-year lows, and now again we're coming back up towards that 115 to 117 area. And so the market is expected to stall out over the coming sessions, but there is still risk for one more push up into that area before we see the market roll over. Ultimately, at a minimum now, a break back below the previous weekly low, which comes in around 113.13, would be required to take the immediate pressure off the top side, while a break below 111.10, which is a confirmed higher low, would be required to shift the structure and the focus back to the downside. So overall, there is still risk for a bit more of a push higher, but the market is now coming into some significant resistance where a rolling over or a topside failure is expected in the sessions ahead. Sterling dollar. So cable continues to chop around after the market recently stalled out again above 130, just shy of that 2017 high from May, around 130.50 at 130.48. From here, there's risk for additional consolidation and even some pullback, potentially back towards the 125 area before the market heads higher again. Ultimately, the significant break in this market was back in April when it took out 127.75, which was that previous range resistance that had cap gains off the plus 30-year low from October at 118.40. But the breakout above 127.75 set the stage now for that next major upside extension towards 135, and suggest that the market is finally putting in a longer term base. But again, on a shorter term basis, while we have broken above 127.75, setting the stage for that upside, there still is risk for some consolidation before the market actually looks to head higher towards 135. So again, don't rule out the possibility for setbacks over the coming sessions before the market looks to push higher, eventually towards 135. Dollar yen. So dollar yen has seen gains extend now up to multi-day highs, with the market looking to retest that peak that was seen back in May at 114.37. But overall, when you look at this chart going back to December of 2016 and to present, the market really isn't showing any significant bullishness here. And if anything, we're coming up into this resistance area where we could see the market once again top out ahead of a resumption to the downside and even towards a retest of that 2017 low just shy of 108. It would take a clear break above 114.37 to suggest that the market is looking for a bullish resumption. Euro Swiss. So Euro Swiss continues to push higher and is now knocking on the door of that critical psychological barrier at 110. If the market can establish a daily close above 110, it would suggest that this is a market that's seeing a more significant bullish structural shift on a medium to longer term basis. If, however, the market is unable to establish a close above 110, it keeps the broader pressure on the downside and suggests we could soon see another rolling over or topside failure back towards some major support, which comes down around the 106 area. Of course, on a shorter term basis, 108.40, 108.30 is key support, with a break below, let's call it 108.30, to strengthen the bearish outlook and accelerate declines. But right now, the focus is on whether we close above or below 110. Aussie dollar. So Aussie continues to be very well capped into rallies up towards 78 over the past several months, and so this latest topside failure isn't a big surprise and could set the stage for that next rolling over and break back down towards some multi-day support, which comes in around 73.30. That's the lows that we saw back in May. Ultimately, it would take a clear break above 78 to force a shift in this structure. Dollar CAD. So dollar CAD has seen a collapse over the past several weeks since putting in a 2017 high in May up around 138. The market's dropped about 10 big figures back down into the 128s thus far. Daily studies here are oversold, and on a longer term basis, despite this pullback, we're just into a range within a broader constructive uptrend in this market. And so setbacks should be well supported over the coming sessions, but look for a break back above the 130.15 area to strengthen and put the pressure back on the top side and strengthen that bullish outlook. Until then, we could see some more consolidation down here, but ultimately with daily studies stretched and the market in a broader uptrend, look for the market to bottom out over the coming sessions in favor of a bullish resumption. Kiwi dollar. So the New Zealand dollar, much like the Australian dollar, has been very well capped into rallies over the past several months. With the New Zealand dollar, it's more the 74 to 75 area, and so this latest stalling out that we've seen just shy of the 2017 high that was set earlier this year in February is looking like it could be setting the stage for that next key bearish reversal and a rolling over back towards the multi-day lows around the 68.20 area, which also is the 2017 low that was seen back in early May. SPX 500. The S&P 500 has been stalling out in recent trade off the record highs that were seen back on the 20th of June, just over 2450, and there are many out there that are looking for this market, this intense uptrend over the past several years, to stall out and roll over for a more significant reversal. But at a minimum, this market needs to break and close back below 2400 to strengthen that outlook, while a break below 2320 would be required to force a structural shift. Until then, inability to take out 2400 suggests that this is just a consolidation ahead of what could be that next major upside extension towards a measured move extension at 2480 further up. Gold. So gold has seen a major breakdown in Friday trade. Last Friday, the market took out a confirmed higher low that was in place at 1214 from back on the 9th of May. The market had been putting in higher lows and higher highs since 2016, bottoming out back in 2016, and so the expectation was that the latest pullback that we had seen would find a higher low above 1214 in favor of a bullish resumption back above 1296, the 2017 high, and towards a retest on the 2016 peak at 1375 further up. So this pullback does threaten and compromise that outlook, and the question marks here are there precisely because of that. And if the market can't start to push back up in the sessions ahead, back above now 1230, it will potentially open the door for a bearish reversal in this market that takes us well back below 1200. So we're kind of at a critical inflection point with gold right now. The market would need to establish back above 1230 in the sessions ahead to suggest that the market was seeing a false break to the downside last Friday and is ready to resume that bullish momentum and bullish uptrend that we've seen since the market based out in 2016. If it's unable to do so, it will again set the stage for a more significant decline in this market well below 1200.